In the world of cryptocurrency, there are few names that are as well known and controversial as the twins who own all the Bitcoins. These twins, whose names have not been publicly disclosed, have made headlines for their massive stash of Bitcoins and their polarizing views on the future of digital currencies. Some see them as visionary entrepreneurs, using their wealth and influence to shape the future of finance. Others view them as greedy opportunists, using their power and privilege to manipulate the market for their own gain. Regardless of where you stand on the twins, there's no denying that their story is a fascinating one. From their humble beginnings to their rise to fame and fortune, the twins have made a huge impact on the world of cryptocurrency. In this video, we'll be exploring the story of the Winklevoss twins and their involvement in the world of Bitcoin. We'll delve into their background and how they amassed such a large fortune in cryptocurrency. We'll also examine the various controversies that have surrounded them, including accusations of insider trading and unethical business practices. So if you're interested in the world of Bitcoin and want to learn more about the Winklevoss twins, make sure to stick around for the full video. We promise it will be a wild ride. The Winklevoss twins, Eiler and Cameron Winklevoss, have a number of different claims to fame, including the fact that they founded Facebook. If you've seen The Social Dilemma, you've probably heard about their disagreement with Mark Zuckerberg over the establishment of Facebook. In particular, if you've read The Social Dilemma, you may be aware of their performance in the 2008 Beijing Olympics, when they competed in the men's pairs rowing event and finished in 6th place overall. But much more than that, the Winklevoss twins are pioneers in the cryptocurrency industry and billionaires thanks to Bitcoin. Their experience has the potential to teach others important lessons about how to make secure investments in cryptocurrencies over the long run. The Winklevoss siblings' journey with the cryptocurrency Bitcoin. Facebook settlement. The twins come to an agreement with Zuckerberg that will see them get $65 million in a combination of cash and Facebook shares. They accused him of stealing their concept, as well as part of the code they had hired him to write for them. The two individuals established a business called Winklevoss Capital, which is an organization that offers angel financing to early-stage startups and entrepreneurs. It has investments in approximately 100 different enterprises, and its portfolio now has 20 crypto-focused ventures. In April of 2013, the Winklevoss brothers disclosed that, via Winklevoss Capital, they hold around $11 million worth of Bitcoin. According to a number of accounts, they acquired some of their Bitcoin for as low as $10 per coin. At that time, it was said that the two individuals owned 1% of all Bitcoin that was circulating in the world. The price of Bitcoin dropped from $180 to $80 in the space of a week, not long after that revelation, marking the first of many drops to come on the crypto roller coaster. The Harvard alumni made the announcement that they were participating in Bitinstant, which was one of the earliest Bitcoin exchanges in the United States. Regrettably, Charlie Shrem, the company's former CEO, was apprehended at a later date and sentenced to 2 years in jail for running an unregistered money business. According to the prosecutors, he was aware that the Bitcoin he exchanged had been used for unlawful narcotics transactions as well as money laundering. Later in that year, Bitinstant went out of business. In 2018, the brothers would file a lawsuit against Shrem, alleging that Shrem had stolen Bitcoin from them. 2019 saw the completion of a confidential settlement agreement. Gemini was established in 2014, and ever since its founding, it has garnered a reputation for being one of the most secure platforms on which users can buy, trade, and store cryptocurrencies. It was one of the first businesses of its kind to get a license from the Department of Financial Services of the state of New York. This is noteworthy since New York has among of the tightest restrictions regarding cryptocurrencies anywhere in the United States, and only a select few platforms are allowed to operate there. Bitcoin's price skyrocketed in 2017. In December, it reached an all-time high of more than $18,000. Since then, there have been both increases and decreases in its value, but the Winklevoss twins have resisted the urge to sell their investment in BlockFi. Winklevoss Capital made an investment in BlockFi, which at the time was one of the first cryptocurrency lenders in the United States. Currently, it operates as a crypto financial services organization that also offers respectable returns for savers. Gemini in 2019 acquired Nifty Gateway, a platform for non-fungible tokens (NFTs), which the business refers to as Nifties. NFTs, also known as unique digital collectibles, are often in the form of artwork or music and enable artists to earn from their digital creations. Another facet of the blockchain industry that has seen explosive growth in recent years is that of NFTs. The fact that the brothers are once again at the forefront of the business is shown by the fact that both BlockFi and Gemini have put up waiting lists for cryptocurrency credit cards that are scheduled to arrive this year. These cryptocurrency credit cards will enable you to receive rewards in Bitcoin and other digital currencies, in addition to offering possible trade savings, and will provide you the ability to earn rewards. Bitcoin's meteoric rise started in 2021, which is also the year it achieved all-time highs. It was estimated to be worth around $30,000 before the year began. By the month of March, it had already surpassed $60,000. It is not quite obvious what the brothers control. However, we are certain that they have not liquidated a significant portion of the capital they first invented. According to Forbes, the company presently has an estimated 70,000 bitcoins in addition to other digital assets. After all this success, do you know these twin brothers are now sued by the investors? Investors are taking Tyler and Cameron Winklevoss to court over their interest-earning scheme known as Gemini Earn. The Winklevoss brothers are crypto millionaires and the creators of the Gemini cryptocurrency exchange. The Winklevoss twins and their cryptocurrency exchange were accused of fraud and violations of the Exchange Act in a proposed class action complaint filed in Manhattan federal court by cryptocurrency investors. The investors argued that the platform failed to register their interest-earning accounts as securities, which was a violation of the Exchange Act. The Gemini Trust Earn program provided investors with high-interest accounts, enabling them to lend their cryptocurrency assets to Gemini in return for interest payments of up to 8% of the principal amount. However, the platform was forced to halt redemptions in the middle of November after Genesis Global, a subsidiary of Digital Currency Group and a key partner of Gemini, became entangled in the crypto contagion caused by the collapse of Sam Bankman FTX. Fried's The implosion of FTX was caused by the fact that Genesis Global was a key partner of Gemini. According to the allegations made by the investors in the lawsuit, Gemini refused to honor any additional investor redemptions, thereby wiping out any investors who still had assets in the scheme. They said that had the platform registered the items, they would have received disclosures that would have enabled them to conduct a more thorough risk assessment. Gemini Earn has been inaccessible to consumers since the cryptocurrency exchange suspended withdrawals, as the site has millions of dollars worth of earnings trapped on Genesis. An update provided by the firm on December 23 said that efforts to remedy the liquidity concerns at Genesis are being carried out with the greatest haste. According to what has been reported, Genesis made an emergency request for a loan of $1 billion prior to mid-November when it closed redemptions for customers. The company acknowledged that it was going through a liquidity crunch due to certain illiquid assets on its balance sheet. Additionally, the company stated that it was dealing with an ongoing run on deposits driven primarily by retail programs and partners, as well as institutional clients testing liquidity. The failure of FTX has resulted in a rapid and widespread contagion that has affected a number of businesses operating in the same sector. In addition, the incident caused crypto values to plummet to all-time lows, further compounding the continuing crypto collapse that began with the failure of Terra's algorithmic stablecoin UST. Moreover, the event led to crypto prices tumbling to all-time lows. Thank you for joining us for this deep dive into the controversial twins who own all the bitcoins. We hope you found the video informative and interesting. The world of cryptocurrency is constantly evolving, and the Winklevoss twins continue to be major players in the space. Whether you view them as heroes or villains, it's clear that they have had a significant impact on the development of Bitcoin and other digital currencies. We'll be sure to keep you updated on any new developments or controversies surrounding the twins, so make sure to subscribe to our channel and hit the notification bell to stay in the loop. Thanks again for watching.